Hello, everyone. Welcome to today's episode. Today is Tuesday and marks another trading day of the week. So before we go to the charts, let's check fundamentals. And looking at today, you can see we have, even there is no forecast, Richmond Manufacturing Index. There is no forecast, consumer confidence. There is no forecast due to government shutdown. Right. So let's go back to the chart. And yesterday, you can see gold flew 1,500 pips. These days, the way gold is moving, it is easy to make 500 pips movement. Very easy for gold. Yesterday was 1,590 pips, even 99, so almost 1,600. Right. So what is likely to happen daily? If you look at daily, you can see yesterday gold strongly closed above Friday's opening, right? So, are we expecting a pullback to the Friday opening for the market to continue on pushing, and which is likely a new all-time high, right? So, if you look at it very well, that is what is likely to happen. Now, H4. So if you look at H4, you can see that yesterday the market tested the previous resistance, got rejected with two rejected candles, right? So how far can this rejection go? So I'm expecting to see a touch, right? It's touching 30, 43, 43, 15 level all the way to 4300. If it touches 4300 and get a nice rejection, we can take a buy from there. Of course, this level is rejecting gold from dropping. So that is the first rejection point of which we are going to observe. And then this area as well. All right. So what we have to do is to just be on the sidelines and observe. Once we get clear indications that, of course, the market is ready to go, we just follow and print some money today. All right. If you look at H1, you can see that H1 has given double top formation right there with a bearish engulfing, but the bearish engulfing is not too sweet because it got rejected. It couldn't close below this small structure here. Right. It couldn't close below this structure, which makes it not much stronger, because if you look at here, you can see the reason I'm saying it's not much stronger. So we just have to observe during the New York London session and the New York session, you will be able to see whether the market is going to go all the way to touch this area, which is the 22, or even come all the way to the 00. Right. If it comes to the 00, I will have a straight buy back to somewhere 30, 38, 40 level. All right. So that is what I will look out for. But of course, the market can also manipulate people and come all the way here, because if you go to 30 minutes, you are going to see that there is a demand right there at the 42.79. All right. So all we need is patience. Once the market gives opportunity, you only go into it and pick a trade. Now let's go to the 30 minutes. So if you go to 30 minutes, this is what is happening. So all we need is patience, right? All the levels, I've used the line levels which can give you at least 100 pips. Okay, at least 100 pips. So if you if you are able to exercise the patience, you can easily catch 100 pips from this market today. All right. So with that being said, this is PiP Hunter here, and the PiP must pay. Make sure to manage your risk very well because you have no idea of which trade hitting your TP and which trade hitting your stop loss. It is only risk management which can keep you active in the game for the long run. And until then, I will see you in the next video and have a nice day.